Okay, good afternoon, everybody. This is Chuck Hughes. It's great to be here. We want to talk about our PowerTrend system for trading stocks and options today. And today we'll be looking at the techniques that we can use for increasing our percentage of winning trades and also option trades that have built-in profit potential. And I'd like to have a question and answer session at the end of the presentation. Now, all the strategies we're going to discuss today are limited risk strategies, and you can't lose more money than the cost of the trade. So as you know, shorting stocks or selling naked puts incurs unlimited risk, and you can lose more money than you invest. And this can result in a margin call, in which case you'd be legally obligated to pay the monies lost. So all the strategies today will be limited to the cost of the trade. We use what we call the PowerTrend system to identify stocks and options with good profit potential. And the PowerTrend system identifies the price trend of a stock, which allows us to trade with the trend instead of trying to predict the future price movement of the stock. And we found the 1-month price of a stock in relation to its 10-month simple moving average is a good way to identify the major trend of a stock. And if the 1-month price of a stock is above the 10-month simple moving average, then a bullish trend is indicated. And if the 1-month price is below the simple moving average, a bearish trend is indicated. Now, we only look at the 1-month price of a stock in relation to the 10-month simple moving average on the last trading day of the month. And then we ignore all other trading days. So it only takes a minute to check and see if a stock is on a PowerTrend buy signal by pulling up the charts, which we'll show you shortly. Now, a PowerTrend system buy signal is established when the 1-month price of a stock is above the 10-month simple moving average on the last trading day of the month. And a sell signal is initiated when the 1-month price of a stock is below the 10-month simple moving average on the last trading day of the month. Now, the price movement of a stock reflects all of the known information about a company. So we like to use the PowerTrend system to follow the price movement of a stock. We quantitatively measure it, and then we're able to follow the price movement of a stock, which reflects all the known information about a company. And downloading the 1-month and 10-month simple moving average chart can be easily downloaded from stockcharts.com with the basic subscription. And the last time I checked, that was I have the basic subscription, and it was $15 a month to download the charts that display the 1-month price as well as the 10-month simple moving average. Here's an example of a 1-month price chart and the 10-month simple moving average. And this is for the cloud computing ETF, symbol SKYY. And this red and black line right here represents the 1-month price movement of the stock, and this blue line represents the 10-month simple moving average. So let's look at the more recent price movement for the cloud computing ETF, and this is over a shorter time frame. You can see this black and red line is the 1-month price. The 10-month simple moving average is this blue line right here. So we can see last year back in October, the 1-month price crossed below the 10-month simple moving average. So SKYY was on a sell signal at that point. So it sold off during the December sell-off, but then rallied in January And this line right here is the last trading day in January, and we can see that the price of the stock was above the 10-month simple moving average. So the cloud computing ETF was on a buy signal at that point. And our brokerage confirmation shows that on January 31st, we bought 1,770 shares of the SKY ETF at 53.56. So this was the last trading day in January. The stock price or the ETF price closed above the 10-month simple moving average, so we purchased the ETF at that point. Here's another example. This is for the mobile payments ETF, symbol iPay. And again, we have the 1-month price depicted here on the chart, and we have the 10-month simple moving average, which is the blue line. And we can see the last trading day in January, the price of iPay closed above the 10-month simple moving average. So iPay was on a buy signal at that point. And on January 31st, we bought 2,400 shares at 39.06. So these are examples of recent buy signals that we took using the 10-month simple moving average. Now the goal of trend following is to quantitatively measure the price trend, and if we can quantitatively measure the price trend, it allows us to follow the trend instead of trying to predict the future price movement of a stock. So we like to use a mechanical system instead of using emotional decision making, and eliminating emotional decision making can give us the discipline we need to be successful traders. And we've been using trend following successfully for more than 34 years, and our trend following system worked well in the 2002 and 2008 bear markets when we established short positions. Now, because PowerTrend is a totally mechanical system, we did some historical testing, and when the 1-month price of a stock is above the 10-month SMA on the last trading day, then we bought the stock in the test, and when the 1-month price is below the 10-month SMA on the last trading day of the month, we would sell the stock. So those are the parameters for our historical testing. And we did a test on 5 stocks and 5 ETFs in different sectors over the past 10 years. And the system was profitable every year, and it had an average yearly return of 18.9%. And this was strictly for buying the stock or the ETF and selling the stock or the ETF. This didn't involve options in any way. And looking at the historical results, these are the 5 stocks and ETFs we tested, and we had 40 winning trades, 14 losing trades, so we had about 74% accuracy using the system. Gross profits were 1,958%. Gross losses were 68%, so we had a 28-to-1 profit to loss ratio. So we had $28 of profit for each $1 of loss. So that's a very low risk way to trade stocks and ETFs. And the average winning trade was 49%, and the average losing trade was 4.9%. So we can see the winning trades were much higher than the average losing trades, and that's an indication that PowerTrend exited the losing trades before they developed into big losses, that's a key part of our money management program. So a very low risk way to trade stocks and ETFs. If your average losing trade is only 4.9%. You can take the loss and wait until that stock or ETF goes back on a buy signal before you buy it, and that way you avoid those big losses that occur during bear markets or market corrections. So over the past 10 years, of course, we've had a very bullish trend in the market, but let's look at some longer test periods to see how the 10-month simple moving average system did. And in his book, The Ivy Portfolio, Mebane Faber presented 35 years of historical profit results using the 10-month simple moving average to time the market on these 5 asset classes listed here. So he did 35 years of testing using the 10-month simple moving average. And that 35 years of testing showed no losing years. The profits exceeded the profits for a buy and hold approach for the S&P 500 index over the same period with considerably less risk. The model was invested about 70% of the time, and the winning trades were about 9 times larger than the losing trades. So this was a more expansive test period that included bear markets. So the 10-month simple moving average system held up pretty well, and the system avoided those devastating losses that occur during bear markets. There was another test done by Professor Jeremy Siegel in his book, Stocks for the Long Run, and he tested the 200-day simple moving average from 1886 to 2006, so about a 120-year period. The 200-day SMA is similar to the 10-month simple moving average, as there's 20 trading days in the average trading month. So he discovered that using that 200-day SMA, he increased the returns compared to a buy and hold approach, and also incurred less risk. And this is a snapshot of stocks and ETFs we bought recently based on the recent buy signals, and we have $141,000 in open trade profits for our stocks and ETFs using the 10-month SMA. And on any given day, there could be quite a few stocks and ETFs on a buy signal. So what we like to do to narrow down that list of buy signals, we like to focus on a few stocks in the strongest market sectors, and that allows us to narrow down that list. And right now, we're focusing on the Internet ETF, mobile payments ETF, utilities, cloud computing, healthcare, credit cards, and specialty retail. So we look to buy stocks in these sectors when they're on a PowerTrend buy signal. And here's this is a 10-year chart of the Internet ETF symbol FDN, and you can see the monthly price of FDN was in a strong price uptrend and very consistent uptrend. And as we like to say, it went from lower left to upper right. So these are the kind of stocks and ETFs that we like to focus on. They typically outperform the major market averages, but their price charts tend to go from lower left to upper right, and they have strong price uptrends. So those are the kind of sectors and stocks we like to focus on. Here's a monthly chart for the utilities ETF, very strong price uptrend. This is Visa, the credit card company, another example of lower left to upper right, very strong price trend. NiSource, that's a gas utility, company, Progressive Insurance, the auto insurance company. So again, we like to focus on these stocks and ETFs that have very strong price uptrends and consistent patterns of uptrends during the last 10 years or so. So we will also enter a trade after a buy signal if we follow our trade management rule to exit losing trades before they develop into large losses. So the two examples of stocks I just showed you that we purchased when the stock or ETF went on a buy signal, we purchased them the same day that the buy signal occurred. So, but we will also enter a trade after the buy signal occurs if we follow our trade management rule to exit losing trades before they develop into large losses. So if we enter a stock trade after a PowerTrend buy signal occurs, then we'll normally exit a losing stock trade if we incur a 7 to 10% loss. And if we enter an option trade after the PowerTrend buy signal already occurs, then we will normally exit a losing option trade if we incur a 20 to 30% loss. So we will enter a trade after the buy signal occurs if we follow our protective stop guidelines.